Hello, 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 everybody. Welcome to this VC Lab info session. For those of you who are just joining, we do these info sessions, various webinars, pretty much every single week to educate as many folks as possible that are interested in venture capital, interested in starting their own venture capital firm. So, if you haven't done so already, consider subscribing to these webinars because we do them. They're always available almost every week. And we basically do this to answer all of your questions. Today is an info session. So today we're going to be discussing primarily, the VC lab and so on, but we're obviously going to be answering all of your questions. So for those of you who just joined, my name is Mike Suprovici. I am the head of acceleration here at VC Lab, and I'm also joined here by Adeo Ressi, who's the CEO of VC Lab as well. And we're looking forward to discussing VC Lab, answering any sort of questions that you have about anything related to venture and so on. So if you're joining, start throwing your name in the chat, throw your LinkedIn in there, introduce yourself, say hello to everybody. One thing though, don't share like your investment thesis or anything like that. That's considered general solicitation, is generally pretty bad. So don't put that in there, but say hello, put your LinkedIn and so on and so on. If you have questions, go Dale.
Yeah, so just as Mike was saying, LinkedIn is fine. What you're interested in is fine. But if you put your thesis or anything about what you're doing with your venture capital firm or fund into the description, that can be construed as general solicitation, depending on where you are in the world. That is regulated. So we just recommend avoiding it to be safe. Today, as Mike said, is an information session. So we're going to go over how the VC Lab program will help you create a fund in pretty good detail. And then that should take about 15, 20 minutes. And then the rest of the opportunity will be opportunities for you to ask questions about launching a fund, about the program, about enrolling. We have 1,300 general partners that have started applications. I think it's exactly 1,300 as of this morning. So if your best chances to apply and get accepted is to get that application in now, because the early admissions deadline is on Sunday, October 9th, this Sunday. And we have 1,300 now, but we might have 2,500 or 3,000 towards the end. And what happens is we're doing rolling admissions. So we already have a few dozen people accepted, a few dozen people enrolled. That continues to climb. And so by the end of the admissions period, there's just less spots and more people. So if you want the best chance of joining cohort 9, now would be the best time to apply. So that's just a tip to get started with. Mike, any other high-level announcements, or we can?
Yeah, a couple of things. So at the bottom of your screen, you'll see this Q&A button. If you don't see it, just expand the Zoom browser a little bit and take a look at it. Throw your questions in the Q&A button. Yeah, in the Q&A button, and then just upvote them. We're gonna answer all the questions you have, as many as we can, and so we want to try to prioritize the most upvoted questions. So throw them in there. We'll start answering your questions after we get through this little introduction here.
Right, we already have a first question in from Aaron. I'm just going to upvote it. Aaron, thank you for getting that in. Get all your questions in. We're going to do the overview of the whole program first and then jump into questions. What normally happens is we start the questions and then people rush with questions and we can't finish them all. But if you get your questions in now, we can time it so we can get them all answered. All right, let's talk a little bit about the VC Lab Venture Capital Accelerator. So for those of you who aren't fully aware, we've created a 4-month-long venture capital accelerator that helps everything from pre-seed and angel funds to Series A funds, even some fund of funds, as well as venture builders to complete a first close in 6 months or less. And we just published some data about this morning. Cohorts 1 through 3 were averaging about 10 months to close. Cohorts 4 through 6 are averaging about 6.4 months to close. And actually cohort 6 is 5.8 months. So what you're seeing is a trend downward in the average time to complete a close. Now, there's a lot of reasons for that. First, the program is always improving. So we're always helping streamline, make things more efficient. We rewrite the curriculum for every cohort, and we don't redo the whole thing, but we optimize based on real world events, etc. So that's just reducing and simplifying and making it easier for you to close. So many people come into the venture capital accelerator with an idea for a fund. So they don't have any progress at all. They don't have a thesis. They just have an idea. And they're able to close, as I mentioned, in roughly 5.8 months for cohort 6, from when that program started until when they have money in the bank. Okay. And that's really our goal. Get you to a first close in 6 months or less. And to put things into perspective, closing a venture capital fund is one of the hardest things that you can do. It often takes new managers 18 to 24 months. That's the average in the industry, between 18 and 24 months. So the idea that we can help you get to a close at like cohort 6 in 5.8 months is pretty impressive. So how do we do it? Okay, let's talk a little bit about that. So we have, and I have a diagram. So let me, I won't share it just yet. I'll just get it ready to share in a moment. So essentially there are 3 things that we do. But before I go through the things that we do, I just want to talk a little bit about you. So if you have to be ready and willing to say, I'm going to create a venture capital firm. If you're not there, if you're not really sure, the program can be helpful because it will very quickly help you decide. But we really would prefer only to work with people that are serious about starting a venture capital firm. If you think you're serious about it, right, you may learn in the program that running a VC firm is not right for you, and that's okay. But we really want people who are coming in the program that are serious. The second thing is you got to have the time. This is not for the faint of heart, right? You're like, it's like way harder than starting a startup because you have all the stuff of starting a startup, right? Naming it, branding it, all this stuff. Then you got to do a fundraise sight unseen, right? Because you're investing in a blind pool. A venture capital entity is the manager's future ability to invest in deals. So investors have to back you without knowing what you're going to invest in yet because you haven't made the investments, right? So it's just super hard to do, and you got to make the time. And so just to give you a sense of what the time is, it's realistically, 20 to 30 hours a week for about 3 or so months leading up to the close. And then when you're in the 4th, 5th month and you're closing, that's going to be 40 or more hours. It shouldn't be too much more than 40, but there'll be things that happen, like you can't reach an investor or something, blah, blah, blah. And you're going to just have to, there'll be some weeks where you're going to need to work more than 40 hours to close your fund. I wish it were different, right? I wish this were easier and like you could do it, but it's just not. It's one of the hardest things that you could. Now, as I said, if you went out on your own, you'd be doing the 20 to 30 hour a week thing for 18 to 24 months to get to a close. With VC Lab, we're able to shrink that down to 4 to 6 months. The average in cohort 6 is 5.8 months, and it's been going down, and we're on cohort 9, so we might even be in the 5-month range now. Cohort 8 hasn't finished graduating. Cohort 7 is just about to graduate, so we can't track the closing numbers just yet. We want to wait for a little time to pass, but it's definitely shrinking. So we're helping people get to a close very fast. So how do we do it? Okay, One, the three things I was mentioning. One, there's a curriculum of stuff to do every week that you need to do to close. This isn't monkey work. This isn't learning. This is actual stuff that you absolutely need to do to close. It's not even a maybe. And Mike, if you want to add anything, I know you have strong feelings on this one.
Yeah, I mean, look, the whole point here is to help you launch an enduring venture capital firm, not a fund. And so we're helping you set up everything you need to build this enduring firm that you're going to run for the next 10 to 20 years of your life. And so, you know, a lot of people waste a lot of time on things that don't matter or that are not that valuable, such as spending time with lawyers, such as spending time with fund admin providers that have aggressive salespeople, things like that. And they end up just wasting a lot of time. This is why a lot of this takes 24 months for most people. What we do is we just have you focus on the things that matter at that time. You know, pitching the right LP at the right time that could actually fund your fund. Most LPs can't fund your fund for a variety of reasons. And we can discuss that if you guys want in the, you know, the Q&A, but if you're a fund one in particular, most LPs are just not going to invest. There's a very small subset of the types of LPs that make the most sense, so you can kind of focus on them, right? Same thing with what you're pitching them and things like that. So, you know, this is all about return on investment per unit of time spent. And we help you optimize that to ensure that it's as efficient as possible.
Right. So the curriculum will take you sometimes less, maybe 15 hours, but often 20-ish hours to do each week. And it's just stuff you have to do in order, well thought out, so you're not wasting time, as Mike said, or doing things out of order, which is another big problem. And that's how you're able to close in, you know, 5-6 months timetable. The second big value of the program, besides the curriculum, is that there's this thriving community of peers. We have roughly 1,000 general partners in our Slack group. They're all from either the current cohort, other cohorts, or, you know, previous alumni. And we also have, you know, relatively famous people in there as well. And they respond to your questions and give you support pretty instantly, right? If you post something in the questions channel, if you post something, you're going to get an answer within an hour, because it's a global community, literally all around the world in every country. And I can show you a diagram of where we've created funds, but it's everywhere. And the reality is that you're going to have peers now in related sectors or investing in related sectors all around the world, sharing deals, helping with advice. And that is just an unparalleled resource in the world. The third thing with respect to the program is that we have each week 2 mentoring sessions. One will have like top people. We have Mike Moritz, Roloff Botha. I said Mike Moritz, total Freudian slip, because back in the day, he used to run Sequoia. Roloff Botha is coming on in November. We have Tim Draper coming on in December. So those are some big names. But we also have like just super experts, like top legal professionals, top modeling professionals, and they come in every week based on what you need, and they're going to give you advice in a session like this, but even more interactive. A lot of times it's just all of us on a Zoom where we see everybody's heads and we're chatting about stuff and discussing models and things like that. So it's super helpful to have that guidance by experts as you go through the program. So you have the curriculum, you've got the community, and you've got experts. And that just makes starting a fund much easier. And it's free. The whole thing is free. Doesn't cost you a penny. So, you know, literally there are top managers in the world today that are like, it's one of the best programs I've ever seen, has an 86 NPS, okay? Net Promoter Score. That's nuts. And it's free. So if you don't apply, like, you know, it's kind of shame on you because you're missing out on tons of free resources to do something incredibly hard more efficiently. With that said, there's an additional benefit that, it's not part of the program, but we give it to you for free as well. So we've built the most comprehensive, full-featured closing platform out there, and that is free as well. It manages all of your pipeline of investors, pipelines of deals, manages deal memos for things that you want to invest in. It manages collecting signatures from LPs. It manages pretty much everything that you need to do, and it has a data room in it, everything you need to run a venture capital firm. It's used by more venture capital firms than AngelList or Carta, so it's fairly enormous, and they tell us exactly what they need and we build it. So it's built by the community and it's free. So you can run your whole firm on it. And then you may ask, like, why do you do all this stuff for free? Well, we see venture capital as the future of humanity, right? So everyone that enrolls, well, before I go into that, the reason we think venture capital is the future of humanity, because it's funding things that are going to fix the problems in the world today, right? And so far, governments can't seem to fix any problems. NGOs can't seem to fix many problems. Big global organizations are failing at fixing problems. So it's going to be the entrepreneurs and the people that fund them that are going to fix the problems of the world, because the problems need to be fixed. Like, they need to be fixed now. And that's why we're doing it, because we believe that a new reinvented venture capital industry from the ground up, first principles built the way it should be, will help fund all the things that are needed to make the world a better place. So everybody that participates in the program is required to publicly agree to the Mensarius Oath. And maybe, Mike, you could put a link into the Menso. There you go. Thank you, Mike. That was fast. So, and here's the thing, like, that's why we do it, right? This is our gift to fix the problems of the world. Now, fortunately, we're doing fine financially and all this stuff, because once all that stuff is free, but we do charge for some things that are after the program is over. So we will help you set your fund up and run your fund. So, and we also provide funding. Okay, so we do essentially the full gamut of what you need to launch, grow, run, and capitalize your fund. All right, that's what we're doing to make the world better, is to empower you to succeed in making your slice of the world better, whether you're focusing on climate change or, seeing more female empowerment, or one of the many other areas in health and well-being, and so many fascinating, fun theses that we've helped to bring into this world. So, Mike, do you want to add anything? I want to show the couple things, but I'll pull them up on screen if you want to add anything before I do.
No, look, at the end of the day, we have an entire team and a large community here to help you scale your venture capital firm. We do want to work with people that are serious about doing this with a very strong missionary and ethical purpose, and that they want to launch these enduring venture capital firms, not funds, right? And so if we're not here to help people launch like angel syndicates or whatever the case may be, we're here to help people launch these enduring venture capital firms that are going to power the future of innovation in their local ecosystem or within their market or whatever their thesis may be. And that's what we're here to help. So, if you're interested in doing that, we're happy to support you. And we do this all over the world, as Adeo is mentioning here.
So this is just a slide with where we have launched funds really through cohort 6. Cohort 7 and cohort 8 are our largest cohorts in the world. So we're going to more than double these numbers. right? And cohort 9 is looking to be the largest still. So this is through cohort 6, and it's over 200 firms worldwide. And just to talk more specifically about how the VC Lab program works, and start getting your questions into the Q&A. And do me a favor, everybody, before you add a question, read the other questions, click the thumbs up button if it's something you want answered. That will help us prioritize which to answer first. So this is an outline of the VC Lab program for your benefit, the 4 months. And it covers what we're going over on a high level in the curriculum. There's a lot more to the curriculum. It's very detailed. It does not miss anything that you need to do. You're going to do some things in the curriculum that you may not need right away, but you will eventually need it when you go into due diligence with larger limited partners. So on a high level in month 1, it's all about thesis. If you can say your thesis to someone, and 1 in 3 people are interested enough to invest, then you have a good thesis. Until that point, your thesis isn't that good. Simple test, right? If I tell 3 people, 1 is like, I'm interested in learning more and investing, you have a good thesis. If that doesn't happen, you don't have a good thesis, okay? And this can be like your mom, like really, if it's a good enough thesis, anyone that hears it will invest, okay? And so we're going to do a lot of work on that in the first month. Start working on your team a bit. Excuse me, I had a little breakfast and went down the wrong tube. So we're going to work on your team a little bit, and you're also going to start working on your deal warehouse. One of the most valuable things that you can do as a new manager is show strong deals that you have access to. So another very valuable thing is have a great track record. But if you don't have track record, you can always get some deals that you're going to invest in with the fund and show that. And that's exciting. And it's almost as good as track record. So we get you working on it right away. So whether you have a great track record or you don't have that great of a track record, you can still close in roughly 6 months. In the second month of the program, we start working on your fund materials, and you're going to begin pitching LPs. So you're going to have working on your deck. Once your thesis is good, you start building your deck. You start running the deck and your thesis by more and more LPs, ramping up connectors to LPs, etc. And that's building some momentum. And then you're
one slide connect. So everybody, you're actually going to start talking to LPs in like week 2 and 3. Right, but you're going to start really activating and having lots of LP pitch meetings kind of in the middle of month 2.
Right, and you're going to have an outline of your fund economics, but as you talk to more LPs, you get more feedback, you refine your deck, you refine your model. Then coming in month 3, you're really building out the economics of the model, and you're ramping up pitching, getting your data room ready, getting everything ready so that, you know, when those interested LPs are, you know, asking for more information, asking for your model, you have it all ready, right? That's going to lead to what are called PACs being signed, or letters of intent being signed by LPs to invest. You're going to streamline your funnel to get more signatures from LPs that they're interested in investing in your fund. And that's going to prepare you for month 4, where you really begin setting up to close. Now, some people are closing in month 4 for sure, right? But most people will close in month 5 or 6 right now. We're trying our hardest to get everyone to close in month 4, but right now I'd say it's about 10 to 20% of the cohort, Mike, are closing in, you know,
yes, that's correct.
Right. So that's an outline of the program, everybody, in more detail. I want to turn it over to your questions now. So again, pop your questions into the Q&A. Upvote them with, review the questions that are already there as well. Upvote them with the thumbs up, and Mike and I will get through them, as many as we can, hopefully them all.
Let's do it. So do my other business partners need to apply as well? So yes, but these are going to be your managing partners, right? The people that you're going to be working with on the fund, like no associates, no like principals, no like lower level kind of people. We're looking for the folks that are managing and running the firm, right? And so that's who you want to have. So if you have other folks that you're going to be managing this firm with, make sure that you have all of them apply at the same time. And it's super important that you all go through this experience together because as we mentioned, this is going to be a very fast experience. And if they are not in the program and you are, you might be over here at the end of the program and they might be down here, right? So you want to try to get everybody in if you can.
Mike, for everybody, I see a question in the chat. Don't put questions in the chat. Put questions in the Q&A and upvote them.
What is the average close size, target fund size relative to the average first close time?
Yeah, so let's talk about all that. So VC Lab this year will accelerate roughly 250 venture capital firms. That's about 50% or more like 60% of all new manager funds worldwide. So we're roughly 60% of the market right now. So our averages are kind of the industry average. So we're looking at roughly 17-ish million for a first close, which is what you see as the average.
No, 17 million for the fund size, the first
fund size. Sorry, yes, not first close. Thank you, Mike. That was a big gaffe. It's best to be precise. So the first close is usually 10% to 20% of your fund size, and it's a 17 million roughly average fund size. In terms of time, as I just mentioned, cohort 6 time to close is 5.8 months. The industry average, however, is 18 to 24 months. So we're way faster than industry. Yeah. So, and then in terms of the other stuff, basically, there's a lot of areas where VC Lab funds are outperforming. So because of our warehousing strategy and how we help you set up, and so our costs are lower, right? Because we help you avoid doing stupid mistakes like working with a lawyer too early, working with the back office provider too early. Our performance out the gate is higher. So almost all of our funds launch with a positive. So we don't, there's something called a J curve where funds have negative IRR for a while and then they have positive IRR. Our funds don't have the J curve for the most part. They're coming out the gate with positive IRR because they're doing our deal warehouse strategy correctly. And they're bringing in deals that kind of are in the money out the gate. So our funds are performing better than average on launch. So on the whole, like VC Lab funds right now are poised to dominate our new and emerging manager categories because they're launching faster. They're taking less money to get to that point and time, obviously, and they're coming out the gate stronger. So we're definitely leading the market at the moment. And that's part of the reason why 60% of all new funds are launching with us.
Do you assist with the process of identifying and approaching potential LPs? Could you talk a bit about how this works? So look, we help you identify, through the program, you're going to learn how to identify the right LPs that make the most sense for your thesis. Okay, we're gonna help you with that. We're gonna like make sure that you're not wasting time with LPs that don't matter or that they can't fund you and things like that, as I mentioned at the top of the hour, right? We're also gonna have LPs come in and mentor. So that's gonna be available as well. So you can ask them questions about how they think about things and stuff like that. So yes, we're gonna work through that process a lot. But just be perfectly blunt, like if you're a new manager and you're about to do a first closing, so you're like super risky, very, very risky. The LPs that are going to fund you are primarily going to be people in your network. It's just a fact. You're not going to get some random person that doesn't know you, like randomly coming into a super risky fund that has never and invest into this manager that has never ever managed money professionally before. It's just super unlikely for that to happen, right? So what we do is we try to help you find people within your network or second degree connections or whatever the case may be, that are more likely to basically fund you. And then as long as the thesis really resonates with the conversions being quite high. That's why we spend so much time on the thesis. But yes, through the program, you're going to see folks and get optimizations around
You
that.
will meet some LPs in the
Yes.
program, but let me put this in perspective. If you met 5 limited partners in the program, that is not very much, because you need somewhere around 200 limited partners or more, depending if you're in a developing market, it could be 500 in order to close. So this is a fractional percentage in the larger cases of the limited partners you're going to need to meet. And yes, we give you all the systems for free, all the tools and the techniques to find and close limited partners. And you'll even meet a handful of limited partners. But if anyone tells you they're going to introduce you to limited partners, they're just lying to you, and you should probably discount them a lot, right? We're not here to, the Mensarius Oath, you can look it up, very clear about being honest. So you're going to need to pitch 200 to 400, maybe 500 LPs, certainly to close the whole fund, and probably a big portion of that to do a first close. Okay. You're going to have to find these LPs on your own. We're going to show you how, right? But again, if anyone is telling you they're going to give you LPs, they're going to get that, it's just not true. And you should be very mindful not to work with people who are dishonest. Okay. Like, life is too short. And the world needs help right now. We don't need a lot of people full of BS lying to you. And when you're on a mission to do something important, right? So just walk away. Okay.
Will the back office tools always be free?
Probably not. So it's the market leader right now, and it's free. At some point, we will charge for it. How we will charge for it, we don't know. We're not going to take it away from people, that's for sure. But it's so powerful that maybe the back office components won't be free, but all the front office components will be free, something like that. We don't have a strict plan, and we're not really doing this to make money. Okay, let me be abundantly clear. Like, we are making money, which is great, but we're not doing it to make money. We're doing it to fix the world. And like, if we fix the world and don't make any money, victory. If we make lots of money and don't fix the world, failure. So this is not about making lots of money here. So sure, could we make tons of money by charging for the platform and squeaking pennies here and there? Yes, definitely. We could make tons of money. In fact, everyone's like, you're leaving so much money on the table. And we're like, yeah, because we're not going to charge for these things, right? So this is not about money for us. This is about fixing the world. Okay.
I guess applicants are at different stages. How does the program respond to that? Is there a way to, and then the second question, is there a way to outreach LPs through the program? I think we covered that one offer, but let's talk about the first one. So we have people in these programs that have done really well, whether they're at Fund 1 all the way through Fund 3. We have had people that have done a first close or even a second close, and they've been able to take a lot of advantage of this program and what it does and how it works in the community. And they're able to get second closes done much stronger because they were able to revise their strategy a little bit and their thesis and their pitch. So the program is pretty flexible on that, and again, there's curriculum. That's one part of it. And that's, again, if you've done some of the work already, no problem. Just say you've done it, right? So that's how we kind of manage it in the curriculum. And then we do AMAs like this, talking about your particular situation. And so we help you that way as well. We also
let's get super specific though. For everyone who has not done a first close, the program is fantastic. Okay. It's amazing. If you've done a first close, and this is on, if you're on Fund 1, Fund 2, Fund 3, if you haven't done a first close, the program's fantastic. if you've done a first close and you're working on a second close, but it took you a long time or was kind of inefficient, we're going to help you really level up your game, right? If your first close took 10, 12 months or whatever, you're going to go through the program. You'll probably get to a second close in 4 or 5 months, like before, even before the program's over. So it really depends. If you've done a first close and you did it really fast and you have tons of money chasing you down and everything's going really smoothly, then the program probably isn't that useful for you. But if the first close took a long time, it wasn't that smooth, it was kind of a pain in the butt, this program will tighten everything up and get you in a really good spot to do a second close much faster and more efficiently. Everybody, do me a favor. I want to try and answer all your questions, okay? I think we might be able to do it. Don't add a question right now. Look at the list of questions and upvote so Mike and I can get to the most important questions first. Okay, let's keep going.
Yeah, so we have 23 questions and roughly about 23 minutes. So let's go. Any advantages or challenges of a venture builder startup studio looking to transition into a hybrid VC model? Not really
Tons
sure.
of people do that.
Yeah, tons of people do that. I'm not sure what you mean by hybrid VC model. You just, it really depends on kind of your value add.
Most venture builders will have or startup studios these days are doing a 2 kind of structure setup. So they have the venture builder and a fund vehicle side by side with a management company on top. And there's a question of whether you want to consolidate. You want to have a banking layer consolidated in the fund or a banking layer in the fund and the studio. That's the big question you need to ask. We cover a lot of this in the program and work with maybe 10 to 15% of the people in the program are doing venture studios, venture builders, and the like.
Do you think that a solo GP fund is possible to raise? Yes, 66% of people who have closed so far are, a solo GP. In many ways, it's an advantage. Echoing Warren, what's the fastest close you've seen, and at what target size from the first time?
So look, it's not, I think if you're getting it done in 4, 5, and 6 months, which people are doing, that is just unheard ofly fast. It's just not, it's
yeah, especially like from idea.
Right. So I think we have like an African manager that did it in 5 months. We've got a Chilean manager that did it in like under 5 months. We've got like some US managers that are in like, under 5 months as well. Anything under 5 months is like unbelievably fast because it's normally 18 to 24 months. That's the norm. Just to give you guys like, why does it take so long? Well, first you do things out of order. Like you start talking with your lawyer when you're not ready. So you're spending lots of money unnecessarily. You do a pitch deck before you have a final thesis. So you're constantly changing your pitch deck like every week pretty massively because you don't have a good thesis and you're using the pitch deck to iterate your thesis, which is not smart. And lots of other mistakes. Right? That just eats time. And then when you actually start to close, a lot of the things that you do take a lot of time. Like if you don't go, you like, oh, I'm going to go to SVB. Well, SVB is sort of fast. They can set up your bank account in like 2 weeks to a month. But a lot of banks are slower. They could take 2 or 3 months to set up your bank account. Okay. So if you're like, I'm ready to close, let's go set up a bank account. 3 months, right? Whoa, that took a long time. In the US, as I said, SVB can do it in a month or less, maybe sometimes in a week if you're really fast. But we know banks that can do it in 3 or 4 days. Just setting the entities up in most places takes a few weeks, right? So it's just that there's a lot of stuff that takes a lot of time, and we sort of outline how to do it faster. So we're really at the razor's edge of how fast it can be done right now. And we're always looking to optimize, right? But we're at the theoretical limit because we rely on banks, governments take time to file stuff. these are complicated entities with lots of regulations. So it's just, there's some things that are outside of our control.
I'm thinking about approaching general partners to join the fund. I want to bring them during the process of forming the fund. Will that be possible? So yeah, you can.
Yeah, you want to take this one, Mike? I know you're like.
You can definitely bring people into the program, but here's the thing. I mean, like, you cannot partner with people that you do not know extremely well, like people you have worked with for like 5 or 10 years and like a really deep relationship with, because you're owners of this management company of the firm. You're owners. You're not like, an employee or have options or whatever a co-founder would be in a startup, right? And so if you break up, the whole thing kind of falls apart. It's like really serious stuff. So you're much better off being solo if you don't have somebody right now that wants to join you with us than trying to partner with somebody that you don't know. That's a huge mistake, and we strongly advise you not to do that.
Yeah, people break up. People that know each other really well come into the program and break up because they just are like, yeah, I can't rely on that person. So the program's a good testing ground if you don't have a strong relationship with someone. But here's the reality, guys. It takes a lot of time and effort to launch a fund, and it's stressful. So we shrink it, make it easier, but it doesn't make it like easy. It makes it easier. It doesn't make it fast. It makes it faster, right? And so you're going to have a pretty challenging time with any partners that you bring in, because you're going to learn very quickly how good they are. We got stuff we need to do. Like, we got to get this set up. We got to get this paperwork done. We're got to pitch an LP. We got to fly to this event. And it's like a lot of stress on a relationship. And so I don't know, Mike, like, the huge number break up, like
huge number. And that's why we ask you
20,
to bring in your
30%.
partners into the program to ensure that we can save you all of that time before you go out and actually form something. And God forbid you do a first close and now you got to remove a partner that's like incredibly messy and likely going to kill them.
It happens a lot. We've seen one guy drop off the face of the earth. The other partners couldn't even reach him to sign the papers to get him out of the entities. He just dropped off the face of the earth, and they couldn't get his signature on a doc to remove him from the fund. So, you got to be super careful. The program will battle test that. Let's keep going. We'll go.
Do you accept funds that have raised part of their fund prior to the program?
Yes, that's the first close and you're working on a second close. So we do accept lots of people working on a second close.
Is it possible to participate in this program while holding another investing job?
No. Yes, technically, right? But look, you have a fiduciary duty when you open a venture capital firm and when you are running a venture capital fund. You have a fiduciary duty to your LPs that you are going to steward their money for the best possible outcome. And when you're working in another fund, or you're a venture partner in another fund, or you're working in finance, or any of these things, it's definitely has conflicts of interest, right? And in almost all cases, and it's problematic for your fiduciary duties to the fund. So if it's complementary, which in some cases it is, you can disclose this to your limited partners and say like, well, I'm running an accelerator that's related to the fund, right? So you have to disclose those things. And then with full disclosure, the limited partner can make the decision to invest. And then you're going to need something called an LPAC, a limited partner advisory committee, to review your investments decisions to make sure that you don't have conflicts of interest and you're honoring your fiduciary duties. So generally speaking, we would say if you're doing other things, you can certainly ask us about specifics, but as a rule of thumb, if they're at all competitive or in a related space, you probably shouldn't do it, right? Unless it's part of the fund strategy, and then you need to disclose it and put in certain protections.
Yeah, so this is a closing program, not like a learning program. And so, you're going to launch a firm, and eventually this firm that you launch is going to be the number one priority that you have. And you're going to have to leave whatever thing you're doing to kind of focus on this, to manage your LP's money, and just really be the number one priority for you.
Right. We're rebuilding venture capital around the world. We're just reinventing it to be a force for good in the world. So we're going to launch hopefully thousands of funds from Central Asia to Central Africa that just change the way venture capital works and ensures that it's funding things that are going to make this planet a beautiful place for us to live and cohabitate with other species successfully, which we've failed at. So we're going to fix it with capital and with venture capitalists. And so we want everyone here to succeed launching a fund and changing the world.
What has changed in a program that has led to decreasing time to closing for successive cohorts? We just learn, we learn from everybody, and we improve the curriculum every single time, and we improve the program every single time, and we develop tools and systems like we discussed to make the process more efficient and help that happen faster, right? So we just continue to build out more infrastructure and better programming. Is it possible to be a GP and a founder of a startup? Not really, because a startup's all encompassing, and being a GP and a fund is the same thing, is all encompassing. So it's really hard to do both.
So Warren, Warren's asking, what are the paid services? So in the program itself, we have something called Decile Start, and it's designed for 10 funds, and we'll accept somewhere around 200 or 10 firms, and we'll accept around 200 firms into the program. And we pick 10, and then Mike and I help those 10 as best we can every week. So it's like our way to jumpstart the 10 most interesting funds to us and firms to us in the program, and that's a premium program. But again, we can only do 10 because there's only 2 of us and so much time, and we're busy with other things. And after the program's over, we will, again, a subset of firms, usually around 20, we will do all the formation and all the back office for, and we basically are like an operating partner for that venture capital firm. So we'll help set the firm up, run all the firm operations, and ensure that it's a top decile performing firm. And, we take some risky bets there. And, we'll work with some firms that we believe in their mission, but maybe they're not like a certain layup. And then we obviously take a lot of people that are just going to blow it out of the water. And we ensure that they're going to be number one. By being very, very hands-on in the day-to-day operations of the venture capital firm. And that's a premium service as well. But it's only, again, for about 20 firms that come out of that are alumni.
Is FI and VC Lab friendly towards Web3, crypto, blockchain funds, or venture studios? Yeah, we've had all of that. So no problem there. How much funding have you provided to other funds?
So this is a new program, and we'll talk about it more in the actual accelerator. But don't come into it looking for funding right now, because it's a brand new program, and we will, again, if you look at the 10-ish people that get into Decile Start and the 20-ish people that we power, it's an even smaller number right now that we fund. So we're only a year old. We started the accelerator 2 years ago as part of the Founder Institute, and we spun out about a year ago so VC Lab is now an independent company. And so some of these additional things are new offerings that the new company is releasing.
Are there differences across regions in the performance of the managers that have been through the program, time to close, size of the fund, et cetera? Yeah, there are. It's harder, for example, in Africa to just raise a fund. So you end up having to pitch more LPs, for example, but that's also more opportunity in many ways too, because just these markets are growing so much faster and the alpha is so much better, right? So it goes both ways. Latin America is similar in that way too.
We've tripled the number of funds in Africa.
Is it okay if the fund wants to start small initially, let's say around 5 million fund size? Yes, and as a matter of fact, we encourage everyone to start as small as possible, 5 million, even less
10
sometimes.
million.
Yeah,
You really shouldn't be doing a fund over $15 million for your first fund. It's like an MVP, right? So if like it would be like, I'm a startup founder, I'm gonna build like Microsoft Office, like as an MVP. It's like, really? That took Microsoft decades to make it through it. No, I'm gonna have all the functionality of all the tools in my MVP. Really? Not so smart. So your first fund is like a minimum viable product. You make it as small and lean and simple as possible, prove it out, and then get into your second fund. By fund 2, you can get larger limited partners engaged. You have some results to speak to. Fund 2 is easier than fund 1. Fund 3 is a little bit hard because you have fund 1 and fund 2, but they haven't really produced big results yet. So fund 3 is traditionally considered the hardest fund to raise. We're here at VC Lab to support you through 3 funds. We're rebuilding our organization to get you to closes on fund 3.
All right, we're running close to the time here, so let's just go a little bit faster. Can we still apply if we were building a new fund within an established firm? So the answer is you can apply, but you probably won't get in, because we're helping you build enduring venture capital firms that you own and you manage. This program is not for folks that want to do subsidiaries, they want to do a corporate VC, they want to do like something where they're employed by someone else. This is like for people that want to launch their own firms that they want to lead and run on their own.
Now, if you're the managing partner of an existing firm and you want to launch a new fund, then yes, you can come in. We've just seen too many people we've had big company people come in, they never launch the fund. It's just a waste of our time, right? We're here to change the world. And like, you need to control your own destiny to ensure that you can launch the fund you want to launch. And if you're part of a big company or a subsidiary or working for someone else, you don't control your own destiny. You're an employee. They can be like, you're fired. We're not doing the fund. Fiscal things have changed. We're changing direction, blah, blah, blah. Happens all the time. That's not really our interest.
Yeah, there's several questions around like the staffing of a firm and what they look like in general. So for most people with small fund sizes, you're just not going to have a lot of budget. So the staffing is going to be you, basically, maybe you and your partner. You might end up bringing in some venture partners where they're going to be working essentially for carry, but you're not going to have budget to be hiring lots of people.
Yeah, so let's talk about this. You're going to have managing partners, and they're going to have lots of solo GPs, as they're called. And that's one managing partner. And then you might have 2 or 3 managing partners, I would say, are encompass almost every. Some funds have 4, 5, 6, whatever, but like those are outliers. Like I would say the average is probably 1.5 or something like that, because there's like a lot of solo GPs, some 2 GPs, and some 3 GPs or managing partners. Now, on top of that team, you're also going to have what are called venture partners. The average number of venture partners is, somewhere around 4 or 5, between 4 and 5. And those are going to be people that you might want to bring on as a partner in the future, or you need someone to do additional deal due diligence, deal sourcing. And if you're interested, you can look up the Venture Share Agreement by VC Lab, which outlines the duties of a venture partner and how to compensate them. And that will give you a sense of the different things that they do. They don't get paid with cash. they get paid with upside and carried interest. And so the way that your team works is you have these managing partners that they divide up the management fees, which won't be a lot in Fund 1. And then you have these venture partners that get upside for helping out.
Do you have any metrics on diversity in VC funds? What percentage of VC funds are female-led or other represented groups?
Yeah, so it's in the real world, it's bad. It's so depending on what source you look at, it's universally under 10% of women working in venture right now.
And there's a whole other issue on that because a lot of women are, have the title but don't have carry participation. So the stats are even worse than they even look, unfortunately.
Right. So there's a diversity washing of venture right now, but it's really kind of BS. So for us, we're at cohort 8 is 37%, you were saying yesterday?
Yeah, it's 37% of the folks that came into cohort 8 were firms that had at least one female managing partner.
Right, managing partner, not in name only partner that doesn't have carry or doesn't have control. So managing partner means they're controlling. Now that's high, that's great, that's above our target levels for the year. Our goal is to get to 50%. So we don't care what the broken, look, venture capital is broken. Okay. It's misogynistic. It's definitely not racially diverse. It's geographically consolidated, and it funds things that don't matter. Right. I don't normally go on this rant because it's kind of, everyone knows what I'm saying. So we don't want to be anything like that. We could come up with a new name for what we're doing, but we're going to be bigger than them, right? And so they're right now really big because venture capital is kicking butt. Venture capital asset class is doing amazing, right? And so this misogynistic, not diverse, geographically consolidated group of people are partying in probably inappropriate ways. We're just going to build a new thing that's bigger than they are and performs better than they do. And they're going to be relegated to the dinosaur land. Okay. And so in our world, we want to see racial diversity and 50% female participation at every level, period, end of story. And until we're there, we ourselves are failing. But, we're at least, if we benchmark I don't want to even benchmark ourselves against the other industry because it's horrible. Oh yeah, at least we're not misogynistic. That's not a victory, right? We're benchmarking against what we think is right for the world. Half equal number of men and women at every level in the industry. Diversity that equals the diversity of the civilization that we're in everywhere. All right, let's keep going.
I think we're with that. I think that was the final question here. We got to go, everybody. Hopefully this was useful. Subscribe to these. We're going to do another one next week, and the week after there's going to be some.
Well, okay, we do have a minute. Unfortunately, Mike and I are in back-to-back things like this all morning for 4 hours. So, hey, Mike, this is our first one. This was really great. I like this. Good job. High five. So everyone here, very quickly, this weekend is the final early deadline, for the cohort 9. Not exaggerating. It's really probably your best shot of getting accepted. So please complete the application by Sunday. And we have a team. I review them. Everyone reviews them, and we'll do our best to get you in. We want to help everyone that we can. Second thing, if we didn't get to your question, my apologies. We tried to move fast and I go on tangents. Do me a favor. You can post in, I'll even put on LinkedIn, I'll put later today when I'm done with the 4 hours of meetings, I'll put up a thing. Do you have a question? Pop it in there. I'll write you a personal answer as best I can pretty quickly. So we'll try and get all your questions answered. We're here to help. Right? Our goal is to make the world better, to reinvent this industry and make it something that we can all be super proud of that we're working in.
And with that said, all right, everybody, hopefully this was useful. We'll see you next week. Bye-bye.